Hello, everyone. There is a few things that we need to talk about. The S&P is at a very important weekly level. The NASDAQ, large tech stocks are beaten down pretty heavily on a daily chart as well. So we have to take a look at all those things and then make an assessment of what is yet to come. Not even including the fact that Powell is going to be speaking 2 days in a row. All right. So we're going to take a look at all of those things, piece it all together, and see what the next steps are. All right. So I hope you guys enjoy. Please make sure to like, comment, and subscribe. Do all that good stuff. Let's get started with the video. First and foremost, this is the daily chart of Apple. Apple is at a very important round psychological level 170. We are trading. We are opened and closed outside of the lower level of the Bollinger Band. Once again, when a very large tech stock is trading this far overextended outside of the Bollinger Band, which is the standard deviation from the mean, right? A lower standard deviation. When this occurs, there becomes an increased likelihood of a bounce. So being bearish when we are this overextended to the downside is not a good idea. So we see Apple is very overextended to the downside. We also see Google overextended to the downside here as well. So what that means is that when these big multi-trillion-dollar tech companies are overextended to the downside like this on a daily, in the short term, it means that there should be a bit of a bounce, right? So that is essentially what I'm looking at. These large tech stocks have room to bounce. The Apples, the Googles, they have room to bounce in the short term, right? But so we did buy, scale into, I think we got into October. I think we got into October calls. The only reason why I got into calls that far away is because this is still exceedingly weak. To call this like a really good long opportunity would be a lie, right? But down here, this is when you have to start getting your feet wet, in my opinion. So I still think, this is only the second day outside of the Bollinger Bands here. We've seen in the past Apple remain outside of the lower level for even 4 days. Okay, so what could end up happening here? We could drift a bit lower. We could base out. All right, we could bounce a bit, and then we could drift lower to 166, 167 area. At that point, we have to see how far we are away from the Bollinger Band, etc., etc. All in all, right now, in my opinion, this is not the time to start shorting. Right, this is more so the time to wait for a continued move lower, or get some calls for a few months out. Because essentially, if you look at history, right, when Apple is trading this far outside of the lower bands, how long does it take essentially for it to bounce back into the at the money level? All right, so let's just look at how bad Apple did in terms of being like weakness in the Bollinger Band. All right, so back here in December of 2022, this was clearly a very weak point. December 19th and December 20th, we ended up bouncing pretty aggressively within 2 days. Right. Over here as well, in October, we bounced pretty aggressively. Over here in May of 2022, we bounced pretty aggressively. Over here, where the price just continued to fall lower back in January 2022, it took about a week, and then about 2 weeks, and then we bounced pretty aggressively. So what we're seeing here is that here's one instance where, here's another instance where it bounced pretty aggressively, right, back in May of 2021. Basically, the theme here is, so this was the sort of like worst timing. If you had gone long on January 3rd, we made another gap down lower to 180. And then after the course of basically a few weeks, that's when Apple ended up reclaiming back the levels and really skyrocketing. So that's essentially why I bought into calls basically 6 months out, 5 or 6 months out, right? So it gives more than enough time. And even if we did drop lower you know, this is very overextended downside. In my opinion, overall, pretty safe trade. I hope this makes sense because big tech stocks lead the market. When they're overextended, there's a good chance of a bounce. And if these large tech stocks should bounce, then NASDAQ should also bounce, etc., etc. Now, this is the daily chart of the S&P 500. The SPY is at a very, very major 504.50, 505 area of support. We wicked off of that level very, very aggressively, right, at the end of the day. And when we were down at this level, this was textbook support that we need to essentially see if it holds. What will probably end up happening, and we were holding on to NASDAQ Lottos, and those just shot up like 20% very, very quickly. So we bought those at like 340, 330, something like that, and it just rallied. So I was like, you know, instead of holding it overnight, take our 20-25% and call it a night. But essentially, we held this level of support on the SPY very, very well. When you look at the NASDAQ as well, the NASDAQ also held this prior level of 433.50 very, very well as well. So now what we need to see is when Powell is going to speak. All right, so now Powell is going to be giving a testimony tomorrow at 10 a.m. and then again on Thursday at 10 a.m. So with that being said, what could end up happening, also depending on the employment change, depending on what happens with the pre-market news, the market, in my opinion, technically, it should be bouncing. The NASDAQ, in my opinion, should end up bouncing to 438, and the SPY should end up bouncing around 508, 508.50. Once we get to that level, right? And now look what ends up happening if you make a fib level here. Once we get to that level, 508.50, 509, this area is the 38.2%. If the market is genuinely very, very bearish, right, we're going to end up coming to this level and essentially failing and making another low. Now, that is entirely possible. That would correlate with what I said earlier with Apple basing, right? And then bouncing a bit and then making another low. So all of this stuff sort of correlates, but it all really, really depends on what Powell is going to say. Immediately, though, we can only just trade what we see, especially when there's 2 days in a row where he's going to be speaking. It becomes a bit risky and difficult to hold things and trade them day by day. So I was very, very bullish the NASDAQ heading into tomorrow, and I'm expecting things to rally heading into Powell's speech. And gold is continuing to rally, which is a warning sign for banks. From yesterday's video, basically I was showing how when gold was doing well last March, when the banks and the banking crisis was occurring, when the different banks, SoftBank and everything, all of those banks started to collapse, and the Fed needed to step in, gold started to rally. But now gold is starting to rally ahead of time because the loan program that the Fed provided those small regional banks, that occurred last March. The Fed gave a 1-year grace period of a loan for those small regional banks to pay off essentially after a year. But now that ends on March 11th. So March 11th is a very, very important time for these small regional banks. They have to pay back the loans to the Fed. And in my opinion, in anticipation of that occurring, gold is starting to rally. So it's pretty interesting that gold is continuing to rally. Basically, it falls in line with what I'm saying in terms of potential weakness in banks. And last but not least, NVIDIA and AMD are both still doing very well. I wanted to buy NVIDIA calls. Didn't end up doing that. But NVIDIA, essentially what I'm showing is that the leaders are still doing pretty well. And then the losers are very overextended to the downside. Apple, Google, Tesla as well. Very overextended to the downside. So NVIDIA, AMD, still at their highs. Still doing well. Essentially, what you need to think is money can stop flowing that heavily into these. They can begin to stagnate a bit, while Apple and Microsoft and Google end up bouncing very heavy. That's my thought process. So maybe not even heavy, but they'll start getting some buyers. We'll see. But essentially, all in all, what I'm trying to say is when you look at this chart of Apple, when you look at this chart, this is not a time to start shorting. This is a time to start going long. And with risk management. All right. So I hope this makes sense. I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. I will see you guys bright and early tomorrow.